Hey guys, this is Dave from MortgageGuy.com, and in this video, I'm going to break down everything you need to know when it comes to deciding between an FHA loan and a conventional 3% down payment loan. But before I do, please subscribe to my YouTube channel to keep up with more videos like this. So this video is purely to break down if you're on the fence on which loan option you would want to go with, putting down the minimum down payment on an FHA loan of 3.5% and putting down 3% on a conventional loan. Now, keep in mind, both of these loan types are fantastic. It's really based on more your situation. I always say, what's the best loan for you? The one that gets you in the house. So don't assume that one's bad or good. Just know all the details and see which one works best for you. So let's start off with the obvious, the down payment. FHA's minimum down payment is 3.5% of the sales price. Conventional is going to be 3% if you qualify for their 3% down program, or otherwise known as a 97%. So you've got that. You also need to keep in mind that it's gonna address credit score. On FHA, the minimum credit score for myself is 580. Some lenders are gonna require a higher credit score of 600, 620. Conventional, the minimum credit score on a conventional loan is 620. But that does not mean that if you have a 620 credit score, you're automatically going to get approved for a conventional loan. That's not the case. You most likely will end up going FHA in that scenario. Let's talk about fees. FHA loans at the moment roll in a 1.75% of your loan amount fee into the loan. Conventional does not. Let's talk about mortgage insurance. When it comes to mortgage insurance, if you're putting down the minimum 3.5% on an FHA loan, your mortgage insurance is going to stay in that loan forever until you sell the home or refinance into a conventional loan. Conventional, once you get to 20% equity in the home roughly, the mortgage insurance goes away. So as you pay down on your mortgage and your home increases in value, eventually that would go away, giving you a lower payment. I want to break down mortgage insurances and interest rates, and we're going to use a $400,000 loan amount for this universally, okay? So let's automatically go over the FHA mortgage insurance options, right? Or option, which is 0.55% of your loan amount, which is roughly going to be $176 a month in mortgage insurance. If you have a 580 credit score or a 780 credit score, the mortgage insurance is going to be the same for an FHA loan in any one of those scenarios. Let's break down conventional mortgage insurance, which is affected by the credit score. Let's say that you do have a 620 and you do qualify for mortgage insurance. The mortgage insurance itself is going to be 1.88, which is about $608 a month. So over $430 more than if you went FHA. FHA being more aggressive for those lower credit scores. If you have a 680, your mortgage insurance factor is pretty much 1%, so 1.04 in this example, and it's going to be $336 a month, about $160 more than an FHA example. So on a 680, it would be better to go FHA if you were just addressing the mortgage insurance. Let's do a conventional loan at 720. The mortgage insurance is going to be 0.69, about $223 a month in mortgage insurance, which is about $47 more than FHA. Now let's say you have a 780 credit score. Your mortgage insurance factor is 0.36, which is about $116 a month. This is $60 less than what it would be on an FHA loan. All right, now let's talk about credit score, loan type, and what interest rate that you may get, right? So on an FHA, 640 credit score, $400,000 loan amount, let's say the rate is 5.625, depends on the day, your situation, and rates, right? So that's roughly the rate. Now, if we're going to do a conventional loan with a 620 credit score, which again, you may not get approved at that score, but if you did, your rate would be 6.75, so higher than the FHA rate. If your credit score was a 680, you're looking at a rate of 6.375. At a credit score of 720, you'd be looking at a rate again of 6.375. And if you had a credit score over 780, you would have an interest rate of 6.125. So those are the differences interest rate wise between the FHA and the conventional. So again, FHA being extremely aggressive when it comes to credit score and giving you better terms. We've got that. Let's talk about debt to income ratio. When it comes to FHA loans, they're gonna allow up to 55% of your gross income for all of your bills, including your housing or mortgage payment. Conventional is going to be 50%. What does this mean? In theory, FHA is gonna allow you to buy more home, which is something important to remember. Let's talk about seller contribution. How much can the seller pay of my closing costs on these two loan types? On an FHA loan, 3.5% down payment again, it's gonna be 6% of the sales price. So if the sales price is $400,000, that's $24,000 in closing costs that they can help pay toward your escrow account, closing costs, cost of the loan. Keep in mind, that sounds great, but if you ask for more seller contribution than you use, you're gonna lose that money. It's gonna go back to the seller. So if you ask for $15,000 in seller contribution, but you only use 10, it cannot go toward your down payment. It's gonna go back to the seller. And on a conventional loan with 3% down payment, you're going to have 3% seller contribution. So on a $400,000 home, that's 12 grand. And so that right there goes over everything you need to know when deciding between the two. And keep in mind, see examples for both. Know the terms. Don't default to even what you're seeing or hearing in this video to make a decision. Compare the two estimates together if it's possible. And remember, you can always refinance down the line. So if you do go with an FHA loan, but eventually you would like a conventional, then look into improving your credit, your situation, whatever it is, and go down that road and refinance down the line. At the end of the day, what's the best loan option for you? The one that gets in the house. Hope you guys found that information helpful. If you did, I'd love to be your lender. Subscribe to my YouTube channel and stick around for this next video. I think you're gonna like it. Thanks, guys.